let's welcome on board our chartists and our fundamental experts and figure out what they're making of the market right now. Got Anshul Saigal joining in on the show, Kunal Bothra on the technicals, as well as Vishal Malkan. Kunal, hi, afternoon. Let me start off with you. 23,100 now, led by banks and L&T combined. What do you see on the cards next?
I think it's an interesting day for the indices, because today I think it's purely again led by large cap names, and this time around it's more keenly towards the private sector banking names, as well as many of the PSU banking stocks, which are showing signs of a continuation up move as well as a breakout for themselves. So I think this is a very interesting as well as a healthy sign. We are sustaining about that 23,000 mark for the index, and we are inching very close towards the life highs for the bank Nifty. So I believe that this could be a sign that the continuation or the rally would continue for both the indices, at least for a good part of this week. Now we could be looking at 22,800 as a fresh short-term base or a support for the index, and closer to 49,000 odd as a support for the bank Nifty.
Okay, clearly that's the verdict coming in. But Vishal, to your mind, which are the sectors which are showing the maximum amount of strength right now? Vishal?
The way things are going on, right? The two sectors which are doing well right now are the auto sector and the metal sector. And auto specifically with Motherson Sumi, Ashok Leyland, and for metal sector, I look at Jindal Steel and VEDL. Those are the two sectors I look as the best performing right now.
Stocks within those pockets do you like or recommend, Vishal?
So I'll go with the Motherson Sumi, which has given a breakout above that 142 level and sustaining above that with high volumes and patterns also bullish on weekly as well as monthly charts. So I look at a buy with a stop of 139 for targets of 160 and 165.
Point taken. Let me bring on board Anshul also in the discussion. Anshul, what's your view on autos? Because when we did the CIO poll today, it was very interesting when I asked them about the overweight sectors. It was the sectors that the momentum is already into, which means PSU, industrials, defense, etc. And there was 0% vote that came in for FMCG and auto. Explain to me what could be the rationale for that, and would you concur with that view?
Hi, Anisha. It's a pleasure to be with you. You see, the reason for that is that capital is scarce. One has to deploy capital as a professional fund manager in the most optimal manner. And it's quite evident which sectors are going to do well in case the current dispensation comes back to power after 4th of July. And 4th of June, that is, sorry. And so clearly that segment of the market, which for the better part of the last decade was the laggard and which has only just started showing some signs of tailwinds, and where the markets expect tailwinds to actually catch pace going forward, it is that segment of the market that excites fund managers most at this time. And for the reason that they have scarce capital, they need to deploy it in most optimal opportunities. Autos, clearly, that is a space which has been interesting. There has been volume tailwinds in certain segments of autos over the last, say, 1 to 2 years. And that is likely to continue going forward. But the gap or the sort of significance of upside that remains in economy-related sectors, capital goods, manufacturing, also cyclicals in the form of financials, which are trading at far reasonable valuations as compared to autos today. I think that it will be investor interest which will sort of concentrate in those segments much more than autos going forward, particularly given the big event that we have on 4th of June.
Sure. Vishal, hi, afternoon. What is it sectorally that you're betting on right now? Where is the trend?
I think, as I said, auto sector is still in great momentum. And the next stock which I would like to go with is Ashok Leyland, which I know has already moved up 7% today. But I still think there's a lot of room on this stock with the stop of 218. I can look at targets of 245 to 250 in the next few trading weeks.
But what's the take on some of these big buzzers right now? On the gaining side, Godrej Properties is seeing a bit of a breakout. Of course, Pharma clearly has been in trend. Within Pharma, Kunal, what looks the strongest? Because Glenmark is doing quite well. There are other names as well from the Pharma pack like Divi's, etc., which have been on the higher side.
So Dr. Reddy is the weaker one. DV Slab is stronger. Glenmark Pharma I think today is again given a price volume breakout, breaking past about that 1100 mark. And the likes of Lupin is is also looking quite strong on the short-term charts. In fact, the stock has been holding up quite well over the last few weeks. There was a very minor bout of correction for Lupin when the stock had corrected back towards I think 1520, 1550 mark. But then the stock has managed to pick up decent pace for itself again. Sun Pharma is the only one from the larger cap names so far which is going through a big broad consolidation and no major signs in terms of volumes or in terms of indicators, and that's one of the major reasons why I would believe that the stock could go into a drag. From the mid cap end of the pharma pack, I would look at Biocon because I strongly believe that the stock is also looking quite strong. 300 has been a major support for Biocon, and I believe that the stock could probably be at a cusp of a turnaround for itself on the long term basis.
Okay, that's the take coming in pharma. Surprisingly, some of the select IT names as well are holding out well today. So look at an LTIM, for instance. Tech M as well is holding out well. HCL Technology is not looking all that bad. And then Persistent, of course, is the one which has shot up about a good 6% and holding on to its gains. Vishal, just wanted your take on some of these IT charts and whether they're trade worthy right now, according to you.
I think they IT stock have gone through a bit of a consolidation in the last few months, and I look at HCL Tech as one of the best bets because it has made a base around that level, which is trading around 1350, 1400, and I think this could be a good bet for long term with very low risk around that 20 rupees and with a target of around 100 rupees plus on the upside from the current levels.
Point taken. Anshul, we're almost through with this earnings season, right? Anything that stood out for you which you've perhaps added in your buy list or something which you've completely checked out of, didn't like the results in the commentary, etc.?
Anisha, this has been a very interesting result season, and I've been on a whole host of calls in this season. What is quite evident is two or three trends. One is that capital goods companies, manufacturing companies are giving commentary that there is significant strength ahead. Many of these companies are suggesting that in the next 3 years they will double revenues. And this doubling of revenues is happening with volume growth. It is not just price growth that is leading to this sort of a uptick in revenues over the coming few years. So clearly, that space sees a lot of tailwind at this time, and this sector, because of the weakness over the last decade, has become a very small part of the markets in terms of market percentage, market capitalization percentage. I think that that is a space where there will be opportunity. I also have heard repeatedly in this result season that rural has bottomed out and the rural economy is seeing green shoots. Some companies have shown that in earnings growth, others have not yet shown that in earnings growth. But it's quite evident that commentary across the board has been positive on this space. So our assessment is that give it another 1 to 2 quarters, and the rural economy will start taking tailwinds going forward. Also, give if the current establishment comes back, their stated objective of doubling rural incomes by 2x, I mean, taking incomes by 2x, that will mean that the rural economy should do very well going forward. So that is a space which should do well. And then finally, if we look at financials, in the last decade, we saw financials which were retail oriented, see their earnings move up, asset quality improve, and as a result, valuations move up as well. That trend has played out for the better part of last decade. Going forward, it is going to be corporate related lenders which will see tailwinds in our judgment. It is here that we are seeing significant volume uptick expectation in the next 4 to 5 years. And it isn't back ended, it is happening as we speak. And so PSU banks, select housing finance companies, select NBFCs, they will see tailwinds in their earnings, and that will reflect in valuations in the coming few quarters and years. So these are three pockets where we find opportunity. And having listened to many calls, that opportunity seems to have been confirmed.
So hold on to that thought. We're going to take a very quick break with news that definitely we've given up that 23,100 level on the index, come off from the top of the day. But yeah, individual stocks continue to hold up. We'll discuss all of that and more on the other side.
Welcome back. Well, India VIX has seen a further spike. So it's a 7% move that we are staring at when it comes to the India VIX, even though the markets have come up quite sharply. So there's that inverse relation which is clearly playing out. So VIX towards the highest point of the trading session, while market has slipped below the mark of 23,000. Let's pull up the intraday chart of Nifty and see where we are getting the maximum amount of drag, because the banks are clearly doing its bit. It's Reliance which is coming under pressure. That stock is down 18 points. Rather, 18 points is what it's contributing to the downside. You also have ITC which has taken a bit of a knock. So there are those murmurs doing round that IIAS has asked the institutional investors to reject the proposal of demerger. That's the reason that stock is trending at the lowest point of trading session right now. NTPC, a bit of a disappointment on the earnings side. At best, a mixed set. Sun Pharma as well as Grasim, these are the stocks which are coming under pressure. Wanted to get a sense from you, Anshul, as to what the best tactical trade ahead of elections could be, because there's a part of the street which believes that we have made the top and perhaps there's going to be a lot of sideways move and profit booking at the end of the verdict come June 4th. What's your take as to what we should do ahead of elections?
Anisha, I've been a professional fund manager and now I'm an individual investor. Okay. And I can tell you, having been on both sides, that this market setup is highly skewed in favor of the individual investor. Why I say that is because if you look at the headline number on the markets, markets will look expensive. Markets have also rallied a lot in the last 1 odd year, maybe since early last year, so say 1.5 years. And so fund managers are who are portfolio managers. They need to buy stocks to ensure that they give upsides yet maintain low volatility in their portfolios, which means that they will need to diversify a lot to ensure that something like that plays out. But this is not a market for diversification. This is a market which will remain narrow. There will be money-making opportunities which will be stock-specific, sector-specific. And so to make a material difference to your portfolio, you will need to be concentrated in those segments. There will be many segments which will consolidate, as you rightly said, but there will be certain segments where there will be a lot of money made. Now, let me give you some instances. If you just listen to some cable manufacturers' calls in this quarter, the kind of body language that they're exhibiting, the kind of language that they're using for the opportunity ahead, I haven't seen that in a long time in the past. If you listen to some of the defense companies and the kind of detail they are giving in terms of the opportunity that exists for them in various segments of their markets, and how the export market is opening up for them, where government is really holding their hand and taking them to the export market, ensuring that they get that market. The opportunity is just tremendous. And while these stocks have rallied, but I don't think that we are at the fag end of this rally. We may be somewhere in the middle. If you look at certain financials, say some housing finance companies which have not done so well over the last 3-4 years, even longer, since maybe the ILFS crisis, and are now trading at half times book. There are stupendous sort of special situations available in that segment. So what I'm trying to say is that this is a market where if you concentrate your capital, there are tremendous money-making opportunities. On the headline number, it may look like an expensive market. And then bear in mind that FIs have taken away monies from this market over the last 6 to 7 months. And they're down by about $4 billion, down to 11-year lows on their holdings of the Indian markets. If the current dispensation comes back, then there will be a mad rush to get back into the Indian market at whatever valuation. So I'm not a votary for taking monies off the table just now. I think the individual investor who's knowledgeable and can concentrate capital will be at a far advantageous position than a diversified portfolio manager. in terms of absolute returns. Maybe not in terms of relative. I mean, for relative return reasons, some fund managers may like to diversify, but for absolute return, seekers, this is quite an interesting market.
And guess what? We've given up all of our gains and lying flat right now on the index. In fact, sub that 23K mark as well. But as we're nearing the conclusion of the elections, Sharad from our research desk joins in to analyze the market reaction over election years. Sharad?
Well, the mandate and the elections, that's a very interesting concept we have taken out. And for the last data from the last 40 years or so, we have taken this data, and out of 10 times, 8 times there will be a positive return in a calendar year whenever there is elections held in India. Maximum returns we saw in the year was 1991, where a lot of reforms was actually coming out in the markets, and that is why the impact was there. And overall, as a median return is expected, that would be 21% in an election year. Now let's understand over the last 12 elections, right from 1980, how the markets have fared. And of course, twice it has happened. It has turned negative also in the year 96 and 98. But overall, if you see, the trajectory is on an upward basis. Now, apart from the yearly numbers, we have a result day move. What was that reaction coming in? And of course, over the last 4 election dates we have taken in, and we can see on the screen itself, it has been on the positive side 3 out of 4 times. And on the May 23rd, 2019, it was on the downward side of almost 1%. 2024 so far has been very strong when it comes to Nifty. Nifty is up almost 6%. And also Nifty Bank itself, if you look at it, that has this year given investors return of almost 2%. Now let's bracket the performance which has happened between the UPA government as well as the NDA government, and we have taken last 4 elections, the UPA Part 1, UPA Part 2 from 2004 onwards. We saw 162% gains on Nifty, while it was 74% in the second term. Now looking at NDA also, there was a Part 1 NDA 58% was there, and the last one, the current one, is coming in at almost 97%, or you could say almost 100% gains. So this has been the moves when it comes to the political parties. But now importantly, let's track the move 1 week prior and 1 week later for the markets. Of course, the volatility was there in 2004, both on the negative side, but largely on the positive side, if you look at it, especially 1 week later also, there has been strong up moves coming in when it comes to 2009, 2014, as well as 2019.
Okay, Sharad, interesting data out there. Thanks so much. So more often than not, the markets have rallied both post as well as pre-elections. Let's see which side it goes this time around. Pre-election, of course, we have seen a bit of a rally so far, but this week will it be about profit booking or continuation? We'll see. But for now, there is profit booking in the markets. Vishal, what's your view? This profit booking, should we make too much of it, or these are just sideways move?
I think every dip is like an opportunity to get into this position, this market. Till we don't close below 22,800, I think we are still in the up move. So every dip has to be taken as an opportunity. And also, as the earlier guest mentioned, that it's more of stock specific and sector specific. So that's where we should be focused on rather than 100-point Nifty going up and down.
Stock specific recommendations for now, top bets?
So as I already mentioned, Motherson, Sumi, Ashok Leyland were the couple of stocks which I mentioned earlier, but the couple of other stocks which are giving breakout in the last couple of trading sessions is REC and PFC, which have done great in 2023, and now they are again getting into new territory above those levels which were resistance in the last week. So REC for a target of 620 and PFC for a target of 560 are looking good for the next coming weeks.
Okay, Vishal, great to have you on the show. We'll let you go on that note. Thanks as always for taking the time out. Anshul, good speaking with you as well. Kunal, let's get in your closing ideas.
So I'll go with Axis Bank as a stock. Initiated a buy, I think, closer to 1135, 1140 mark. Now closer to 1200 levels. So looks attractive. Would continue to have a hold stance on Axis Bank.
Okay, that's a hold on Axis Bank. Banks surely holding out, but the rest of the index is not. We'll analyze that after this very quick break.
If you like this video, then like, share and subscribe to ET Now.